At the request of one of our community members within the free Telegram chat, we're going to be covering none other than Polkadot today. And the Greek quite rightly points out that Polkadot hasn't run this much in comparison with the rest of the alts. We're going to look at what resistance levels need to be broken for that to change. Let's dive in. And here we have Polkadot on the daily. And as Greek quite rightly mentions, that Polkadot hasn't run in comparison to the alts. And you can see here, one thing is that it keeps putting in new bear market lows. That's significant. It means we're still in a downtrend. But what does that mean? It means that if we understand when the trend reverses, then we can know when Polkadot's going to run. And there's a few key areas that we need to look at here. Firstly, the diagonal. And we all know that the diagonal doesn't carry as much weight as the horizontal. We talk about this on the channel. However, it does carry weight, especially when retail traders are entering into the market. This is a retail trader move, this diagonal trend line. So we've broke and we've retested this. See here, we've broke, retested, and then moved to the upside. That's a positive for Polkadot. However, this is the area that we need to break. This is the previous swing high. This is the previous swing low. If we draw a zone in here, this can be our area of interest. And why is this significant? Because it's going to tell us whether the trend's going to continue to the downside or whether it's going to reverse or start carrying on upwards. So that's what this is going to tell us. And what we want to see is a break of this level here. If we break this level here and hold, then that's showing that Polkadot is reversing and moving to the upside. So that's a key area. However, we do have some significant key resistance levels to break. So let us stick these key resistance levels in. Firstly, you've got this. We'll stick a Fibonacci on from top to the bottom. And you can see we're currently testing the 618. We've got a bit of key resistance here at the 618, and you can see this resistance level here, which was a little build-up of price action. This usually holds weight, so we need to break above this. And there's also the $5 level, which $5 is a key psychological barrier that we need to overcome. People put sell orders in at $5. There's lots of people put sell orders in at $5. So that's a key area that we need to overcome. Once we've broken this previous high, which is sitting at $5.75. Once we break this, this is where you need to look at trend reversal. And then you can look at getting in on pullbacks. However, at the moment, we do have this key area we need to break. If price action pulled back here, where would be a good support zone? Stick our Fibonacci in. Get rid of some of this first. Stick our Fibonacci in. Let's zoom in a little bit. Get rid of this. And we can build in our key support zone. Because the price is run at the moment, we don't want to be buying into greed. Polkadot's greed at the moment, and people are getting tricked by this because they think that because we've had 1, 2, 3, 4, about 2-3 weeks of uptrend, that the trend has reversed. The trend hasn't reversed on Polkadot yet. So what key areas do we need to hold? Let's have a look. 618 here. 618 sitting at $4.07. That's going to be a key area. And you can see that coincides here with this previous buildup of price action. That's going to hold weight. If we do reverse past the 618, if we reverse past $4.07, last chance saloon is going to be the 786. If we close below the 786, the chances are that this is going to come back down, reverse, and there's a high probability that we're going to put in a new bear market low. So these are the key areas that we need to hold, and these are the key areas that we need to look out for. If you bought into Polkadot here, you're putting a long in here, and you're talking about risk to reward. You've got this key resistance here, and then you've got this key resistance here. If you're shooting for this key resistance, you usually put your stops below the previous low, and you can see what that does to your risk to reward. However, if you're waiting for a pullback to this 618 area, what this gives you is tight stops. So if we stick this back on again, and then you're shooting for this resistance level, and you've got your stops below here, see what this does to your risk to reward. All of a sudden, you've got a 3-to-1 risk to reward. That means you could take this trade 3 times, and if you're right once, that means that you're profitable. So that's the reason why you need to apply appropriate risk management with every trade. I hope this was useful. This one was for you, Greek. Take care of yourself. Goodbye from me.